Welcome to the Blockchain Fundamentals and its Application, the class offered at Montclair State University at Montclair, New Jersey. My name is Thomas Zakrzewski, and I will discuss today topics on blockchain startups, regulatory and compliance topics, and how to prepare for successful start of your blockchain project. For today's interview, I invited Ethan Gilmore, the entrepreneur and early founder of many startups in blockchain area. Ethan, I give the floor to you.
Hi, Tom. Thanks so much for having me. It's a real pleasure to see you again and to be here with you today. Yeah, to give you a little bit of background regarding me, my name's Ethan Gilmore. I got completely bitten by the crypto bug in 2015, but I initially started my career in hedge funds and investment banking and private equity. I've been able to work all over the world. I was able to do a lot of renewable finance here in the United States, a variety of deals also in Europe. A lot of them were in the media space in Germany in particular. And then I had some experience setting up hedge funds and some investment vehicles offshore in Mauritius and the British Virgin Islands. And when I first heard about cryptocurrency and Bitcoin, my gateway drugs for the space were really the Bitcoin white paper, and then I read the IPFS paper for the Interplanetary File System. I started speaking to some of my friends that were Harvard alumni, and then they basically said, "Hey, you seem to know about this. Why don't you come and speak at the Harvard Business School Club of New York?" And then I got invited to speak at the Harvard Business School Club of Philadelphia. And then I was invited to speak at the National Security Institute, where you and I met in Arlington, Virginia, when we were on that panel together in regards to blockchain technology and national security applications. And from there, I was able to get connected with some great partners in Nova Scotia, Canada, and we co-founded together a project actually in Liechtenstein where we tokenize certified carbon offsets, which can be used to help make Web3, AI, and the real world carbon neutral. So that's carbon utility token. We are a compliant utility token under Liechtenstein law. And we also started Meridian DLT, which is a green data storage and blockchain company based out of Nova Scotia. There's no token in regards to Meridian DLT, but what we're working on right now are carbon neutral data storage solutions, in particular to AI and also distributed ledger technology. There's a bunch of other things that are going on. Very excited about DeFi and other applications, but that's basically my background and how we got here today.
Thank you, Ethan. Such a deep experience, and from cryptocurrencies to a variety of different projects. So for anyone looking to start the project in crypto, especially students, what advice would you give them before they start?
That's a question I think that for anyone looking to get into the crypto space, and again, this is not financial advice, this is not investment advice, but what I would say to anyone looking to get into the space, first figure out what vertical do you actually want to function in first. Figure out where your competitive advantage is, and then you really have to, after that, speak to a lawyer about compliance. You've really got to watch out for anything that has to do with the token. It's unfortunate, especially if you're based in the United States. We still do not have legal clarity regarding what is a security token, what is a utility token. And from there, I also just wouldn't, and this is just what I've done, I wouldn't touch anything, any token project or start a token project in the United States until there's clarity. That's why I went over to Europe, to Liechtenstein. I would also, I think what Abu Dhabi is doing, they have some great, they just passed some regulatory clarity there. They seem very pro crypto. The EU is fantastic. It's been eating the US's lunch when it comes to compliance and how to actually have a legal framework on how to actually launch this great technology, this cryptocurrency. Because you have to figure out that, what are you building? Is it a security? Is it a utility token? Is it DeFi? And if you are going to launch any of those projects outside the United States, I would recommend making sure that you don't offer anything to Americans. You've got an IP block. You're going to have to work to just keep them off, because if you do set up offshore and you do have Americans that come in and buy anything that you're selling, I mean, you can't even solicit Americans. So this is really important, and that's why you have to, and again, this is not legal advice, this is not investment advice, but you have to speak to a good lawyer about it, because unfortunately, the US and also Canada seem to still be closed, while the EU has a great framework. Abu Dhabi and Dubai are great areas. I also think certain areas in Asia, Singapore, have much better framework for people to launch a compliant project. Because what you don't want to do is go out and say, here's my project, I'm going to go do a futures, token sale, and then a couple Americans buy it, and 3 to 5 years from now you're having to explain why you didn't register as security. So that's number one. Number two is just keep reading white papers, look at what's going on in DeFi, look at what's going on also with AI. There's all these applications that are coming on board. Arbitrum just announced yesterday they're turning into a DAO. I mean, just keep reading, and also get out and speak to as many people as you can, because it's a great time to be in the space. But just make sure that you don't have a great business model that's launched in the wrong area. And hopefully we'll have some clarity in the future, but we don't have that yet.
Well put it, yeah. Without concrete regulatory framework, it's very
Mhm.
hard actually to navigate this space. And especially, there's so many regulatory bodies, right? I mean, equities are driven by the different regulatory bodies,
Yep.
right? Equities, derivatives, different ones, commodities are different one. What markets do you think are well positioned to be disrupted by blockchain technology?
I mean, that's a question that we could talk about for a long period of time. I don't want to say everything, but I do think that, to quote Mark Andreessen when he said that software is eating the world, and what we have with cryptocurrency. I mean, what is cryptocurrency? It's the first use case for distributed consensus. There are many other different types of distributed consensus that are out there. I mean, I would say traditional banking, the commodities industry, the securities industry, as well as, I mean, take your pick. I mean, the tokenization of real world assets is going to be disrupted. I think the insurance industry is going to eventually be disrupted. I think there is a huge application too for artificial intelligence to basically be built on top of a distributed ledger framework, as well as quantum computing. And I mean, the commodity space, in addition, I have a lot of experience in the commodity space internationally from my hedge fund background, bills of lading. I mean, there's a lot longer list than that, but those are sectors that I think are going to all be disrupted. And look, does that mean that everything's going to be tokenized? No, but are we going to see the integration of permission networks and maybe layers of tokenization that are set on? Yes. Data storage is another one. I think we're going to have the proliferation of nodes within satellites also. I think as we see more and more off-planet industries, whether it's Starlink, there's going to be distributed networks built into that. So, I mean, what's going to be disrupted over time? I think there's going to be layers of almost every business that are going to be affected by this technology.
That's very well, yes. So you already mentioned a lot about compliance, regulatory agencies. How important is compliance and regulation, and should it be a major factor to consider alongside use case and business model, or should it be considered after the MVP stage? In other words, it's a dilemma of chicken and egg,
Mhm.
right? What comes first, or what should come first?
I mean, first you have to find your business vertical, and you have to nail that space and say, okay, we've got a competitive advantage. We're going to go in here and we're going to do this. Once you know that, then you have to figure out how can we do this legally, and where can we do it, right? Because you can do certain things in Asia that you can't do in the United States. You can do certain things in the Caribbean that you can't do in the United States, and this is all legal. It all comes down to jurisdiction, right? And so you have to say, okay, so if you want to get into DeFi and you want to offer staking rewards, we're seeing actually banks in Europe now and in Switzerland and Liechtenstein in particular that are offering compliant staking. So you can go through and you can do that. I still would IP block Americans out though. So figure out your niche. And also you can build an MVP as long as you're not selling any tokens to anyone. That's the other thing. If you're saying, hey, we're going to build a token, we're going to sell a token, and it's not delivered yet, I think under US law, that becomes a security immediately. So if you go out and raise equity, or you go and raise money from friends and family, and this is the thing with crypto, you may think you're going to be spending all your time working with developers. You're really going to be spending, if you're going to go into this space and do it right, most of your time speaking to lawyers and regulators. Once you get your business niche together, then you have to say, okay, we're going to incorporate here because there's legislation in place that allows us to do it. We have to IP block out, sanctioned countries, Russia, Cuba, Afghanistan, Iran, whatever the link of or the list of countries are for Interpol. And then what is your token? Is it going to be a DeFi staking reward? That's also could be, considered to be a security. So you really have to get in close with your lawyers. And again, no investment advice, no legal advice here. Just telling you, it's once you figure out what your niche is, you've really got to say, where can I do this and not get shut down by 20 different regulators just because you didn't know better. And hopefully that's going to change in North America, but it hasn't yet.
That's very well. So in 2018 and 2019, I spent a lot of time reading regulatory frameworks, or rather proposals to the regulatory frameworks. At the time, I never heard anything from the United States of any regulatory agencies. We had some conversation with the CFTC, and we have heard out, from the central bank and the SEC, but was nothing really concrete, and it was never anything kind of official. What do you think of the United States regulatory approach regarding the blockchain to date? Is it helping or is it hurting U.S. innovation?
Mm-hmm. Well, yeah, I mean, if you remember when we met at the National Security Institute, I think the head of enforcement for the CFTC was on the panel before the panel that you and I were on. I think the CFTC approach is actually the best approach that I've seen in the US so far from a regulatory perspective. A lot of the hedge fund relationships that I have in the United States would prefer to be under, if they had to choose, they would prefer to be under the CFTC than the SEC or anyone else. I just think that the problem is, and maybe it's an issue of scale, because blockchain, I mean, we just crossed $1 trillion market cap. I think a year and a half, 2 years ago, we're kind of hovering back down there again, especially through this last bear market. The regulatory approach, I mean, just at a very high level, when you're trying to determine, I mean, we've got distributed consensus, which cryptocurrencies are only one use case. There's a lot of other different types of distributed consensus that are going to be coming out. If you're trying to determine how that technology is going to grow within the United States, and the test, with all due respect to the SEC, is the Howey test. I mean, that is a platitude from a bygone era. That's like getting the horse and buggy division from the 1880s in New York City to try and determine the future of NASA, right? And Starlink and what SpaceX is doing. It's not germane to the state of the art of the technology. And we need, I think, a new regulatory body to come through and govern this technology. And we have seen that. We have MiCA coming, the Markets and Crypto Assets Regulation. It's coming forth in Europe. Abu Dhabi also passed their own division for the regulation of distributed ledger technologies and cryptocurrencies. I think we need that. Just because the lack of clarity, the rule of enforcement, I mean, it's almost like a road was built and there's no speed limit. So anyone taking that road can get arrested and get a speeding ticket for doing anything. And that's bad for US innovation. When you have, I mean, we should, on the contrary, have a regulatory sandbox where every company in the world, not just the United States, can come here and operate, set up a business here, generate taxes. And we need to grab all the great minds in the world and get them to set up businesses here for the benefit of the United States, for the benefit also of our national security, because to push this offshore is inherently bad for America. It's bad for innovation. I also think it's bad for our national security. For us to just sit there and stick our heads in the sands and just hope it goes back to the 1970s, you're going to push this technology offshore. I mean, even being regulated, when you set up in a regulated jurisdiction, you're competing against groups in Asia that can just jump on DeFi, do no IP blocking at all, and they can have access to billions of dollars on various DeFi protocols in a couple of days. That is what we're up against. That doesn't mean that what they're doing is right, but not everyone that's in this space is up to nefarious activities, and we need to get better at being competitive. And it's also too, just from a perspective of, I don't see what the issue is, because if you have crypto priced in US dollars, I mean, that's like a new crypto Bretton Woods. That would be good for banks. I don't see what the issue is, unless it's a lobbying problem. And if it's just the crypto is not lobbying anywhere near the level of banks and pharma and big oil, then we need to lobby better. I am a part of some groups. I'm a member of the Texas Blockchain Council, and they've done a great job working within the framework. I think they're one of the best, along with what Caitlin Long is doing in Wyoming, to work at a states' rights level to effectuate meaningful blockchain legislation, and also work with lobbyists to, in a nonpartisan fashion, to get support from both Republicans and Democrats to lobby. And we need to see more of that. But the U.S. policy and U.S. regulation, it's just been hurtful, and I think everybody knows that. And this is nothing new, unfortunately.
That's a great point. I mean, they cultivate but not kill it, right? Almost like a
Mm-hmm.
miracle grow. You need
Yeah,
to know actually where to apply it and not over apply it, right?
yeah.
So let me ask you a question about sandboxes, because this is very interesting. Did the regulators actually set any environment like a sandbox for the developers and startup companies?
In the United States,
That's correct, yes.
not to my knowledge. And some people still feel that a sandbox still wouldn't be good enough because it just may take too long. And again, but I'm not aware of any sandbox that's been even blue skied at a state level. I could be wrong, but again, I have not seen anything. And the fact that we still don't have a bifurcation of what's a security and what's a utility, because I've raised hundreds of millions of dollars in my banking career and in hedge funds through private placements. If what the U.S. government's approach is to just, hey, turn it into a private placement, it defeats the whole point of having a token. And the great thing about a token is it can trade 24/7. So right there you have an improvement over the traditional private placement space. We don't have to wait for exchanges to open and close, right? Everyone, remember, in investment banking and in the securities industry, the market open, the market close. You can trade on the weekends. You also have a hypothecation problem where someone can buy a share of Del Monte. It's held in street name, and then the broker that's holding that thinks that my share of Del Monte is also your share, and then we have an inflation, which actually is hurtful, right? Blockchain can help solve that. So right there you have an improvement. So I don't see the point of it's either a private placement or you have to go offshore, right? And again, having had a Series 7 myself and a Series 66, being a FINRA broker dealer was not, I mean, that's also very, very slow. And I think we all saw with the collapse of, in the banking crisis of 2008, nobody really wants the regulated markets after that. I mean, they say that it's great. And I mean, I've heard various regulators say that this is the darling, our markets in the US are the darling of capital formation in the world. We've all seen what's happened with Enron. We've all seen what's happened with Madoff and WorldCom, et cetera, et cetera. We've got a lot of problems here. It moves really, really slow. And if we could take a more nuanced approach, we could actually improve the capital markets with blockchain technology. The disclosure issue too that I've been hearing, this is just me speaking on a personal level. I'm not speaking for any of the projects I have anything to do with. They could simply put into a smart contract all the necessary disclosures and we'd be fine. You'd have to sign off those disclosures and then people could go in and buy it. But they haven't done any of that. And I just think it's because they're hoping it would go away. It's not big enough. They're not lobbying, probably a combination of all those things. But that's what we've been seeing. And again, it's just really not helpful.
Yeah, that's clearly United States is not leading in a regulatory frameworks, which may affect the innovation. But what other countries have effective blockchain regulations in place?
I mean, again, we've talked about a few of them already. We've had a great experience in Liechtenstein. The Blockchain Act that was passed there, the Financial Markets Authority there that we've been working with. They have a very clear regulatory framework. It was also the basis for MiCA that's going to be forthcoming, the Markets and Crypto Assets Regulation, that is basically more of a pan-EU framework that's going to be being placed. They also give you, if you incorporate there and you get a legal opinion and all of those things, you have a pathway to get into a bank in Switzerland, which is incredible. That's a very difficult thing for a lot of projects to accomplish, and that is something that if you incorporate in Europe or you incorporate in Liechtenstein, you have a path forward to actually get into a Swiss bank, and it's completely compliant. And that's very appealing if you're going to go out and you're not going to focus as much on crypto to date from a retail perspective, which is interesting, right? Because most of crypto to date has been retail, and retail has just been a proof of concept. As institutions get into the space and we're seeing more and more institutional adoption, they're going to want to know that if your project is incorporated somewhere, there's regulatory clarity and you can get access to Swiss banking. You have that path right now in Europe. I also think what they've passed in Abu Dhabi and what we're seeing also in Dubai with the free trade zones are very appealing. I don't have any direct experience there. I've been speaking to some companies there about it. I'm learning more. I think also Bermuda has a very effective framework. Bittrex Global, I think, is also set up there in Bermuda. They're also set up in Liechtenstein. So we're seeing better framework. It's still, though, it's new. It can take a little longer, but you can sleep at night knowing that you have a framework that has been at least defined and it's institutionally recognized.
Agree. I'm going to switch the gears a little bit. Carbon emission is one of the sustainability goals, and your company is involved, right, in capturing the carbon emission, and also tackles very interesting problem, which is basically selling the credits or making the credits available, right, to be purchased. Can you explain to students and the audience the essence of this business and how this mechanically actually works?
Sure. So both the companies that I'm a part of, I'm a co-founder with my partners in Canada. So Meridian DLT is a green blockchain and data storage company that's also focused on AI applications. And that's powered 100% by renewable technology, by solar, hydro, wind. And then our other project is Carbon Utility Token, which is set up in Liechtenstein under the Blockchain Act. And we are a legally defined utility token. Our utility is carbon offset retirement as a service. And again, I'm not soliciting anyone here to do anything with either company, just to disclose that. But what we did at Carbon Utility Token was we took landfill gas capture credits from landfill gas sites in Canada, where the carbon has actually been captured and destroyed. It's been verified on a meter, and that's also been substantiated by an independent third party. So it's not forestry, nothing against forestry, but we wanted to focus on actual direct capture of carbon emissions. And so we've taken those offsets, we've put them on our balance sheet in Liechtenstein. We've incorporated there under the Blockchain Act as a utility token. And we basically, every time someone buys cut and retires cut, they can utilize that to offset their carbon footprint. They'll get a receipt. We utilize blockchain technology to do a couple of things. One, it tracks the provenance of where the carbon offsets came from. It also, when it's trading, will solve the problem. There's no voluntary carbon offset price in the world, so we solve that problem. It can vary from under $1 to over $400 per ton. So we solve that problem, and then we also solve the double spending problem. That if you retire it, we utilize blockchain technology to make sure that there's no double spending or triple spending of carbon offsets that have already been retired.
This is very
Sorry, go ahead.
Very interesting technology, very interesting, and actually aligns with the sustainability goals, which probably, or it is, right, renew and pledged by every country in this globe. The last question, Ethan, okay. Your prediction about the blockchain and your prediction about the Bitcoin price.
Oh, well, I think I do think I'm very bullish on both. Prediction on pricing for Bitcoin, I I mean, I wouldn't want to get near that from a standpoint. I think it's going to go up. I think the price of Bitcoin in a year is going to be higher than it is now. In 5 years, I think it's going to be a lot higher. Whether that means it's going to be $1 million or 100,000 or $500,000 is anyone's guess. The the use of the technology, though, and then what we've also seen with inflation, and this is another use case, I think, for blockchain technology, and we've seen some people come out and speak about it. Just the use of blockchain technology to go out and create an inflation-resistant tokens. That's a really interesting use case. The proliferation, though, of DeFi, of layer twos, Arbitrum just came out. Now they have layer threes. There's different types of distributed consensus beyond cryptocurrencies that are coming out there. The ability for blockchain to link into other technologies like machine learning and artificial intelligence and eventually quantum computing. I mean, this is going to be one of those things where, to see where it's going, I can't wait to see where it goes. And we're still really in the proof of concept where it's just been a retail phenomenon with unclear regulation. Think about where it's going to go when we have institutional adoption. We have a clear regulatory framework. It's anyone's guess, but the use case of blockchain technology, I think, is just going to continue to exponentially proliferate, especially over the next 5 to 10 years. I can't wait to see where it goes, but I feel very lucky to be in the space. I love how the community is evolving. I love just being a part of and just sharing ideas with people and see where it's going, because I don't think anyone knows where it's going.
Then I would like to thank you for your time spent with us. We learned a lot about potential hurdles with blockchain projects, and it is great that we can learn from your knowledge and avoid potential pitfalls. Once again, thank you and good luck with your venture.
It was a pleasure to be here.